So I'm going to cut right to the point. This is the entry order trading system that we use for something like gold. Can also work with some other things. Gold works in a very particular manner. Sure, a lot of other things, currencies, indexes can work with this as well, but I really just focus on one thing and master one thing because it makes life a lot easier. So, right off the bat, first thing that we need to do is we need to look at fundamentals and really where the market is. This is very easy to do. The place that I go to is just forexfactory.com, where I will check all the major news events. There's a couple other places. Let me show you exactly where I go. This is a very light step. We're not really trying to be a macroeconomics experts. We are just trying to just get an idea if there's any major event or anything crazy that's going to happen today, and kind of get a little bit of a handle on it. It won't really make it's only maybe 10% at most of our decision making. But let me show you a little bit more detail as to how I really look at the fundamentals. So really, this is how I look at fundamentals. It's very simple. The first thing I always do is check Forex Factory. So Forex Factory is a free-to-use site. It's really popular. There's forums. People talk about trade ideas in the market, and also has a great calendar. There's all different types of calendars. You can get apps. Just go to your Play Store on whatever phone you have, and you can download it. But I like the desktop version. So really quick, for example, we trade gold, and that's our main bread and butter. That's really what we almost entirely do. So I want to narrow down and really only worry about the news events that are worth it, because I mean, crazy stuff's happening all the time, and a lot of stuff really isn't very significant and barely even moves the needle. So expected impact, I only really focus on either red or exclusively red, or sometimes orange, and I will narrow it down to just something like USD, because I don't really care about all the other pairs too much. I mean, I really just want to focus on, the gold is heavily tied to the dollar. Of course, other events will happen, but I only really tie it to like maybe the dollar. Sometimes I'll check euro, Australian dollar, because it's kind of tied and correlated with gold. But this is about it. So I look at the time and I see, okay, today, really not a ton going on in the world in general, and really, okay, maybe there's a Fed meeting tomorrow at 12:30. How significant is that going to be? Not sure. So at around 12:30, maybe before then actually, maybe around 11:30, I'll start to kind of eyeball the market and be a little bit more careful, and see if it's getting more volatile, and I might put it up. But I don't really base off my trades completely off of what is going to be said, and I don't purposely trade these events. If you're successful doing that, that's great, but I find that news is highly manipulative. It is highly unpredictable to always make trades out of it, and it's just not really worth doing, and it's just not something that we want to get ourselves too deep into. So yeah, we're mostly technical traders. We don't really need to worry too much about what all this stuff means. Just know that, okay, at certain times, if it's highlighted red, there's an unemployment rate. Okay, that might on Thursday do something. I really look at, for the biggest things I look for are Fed, which is the Federal Reserve. You don't want the Federal Reserve. You have to research that, because that's a very big loaded topic. And then things like unemployment, farm payrolls are important, anything like that. And then I'll look at also, like, okay, marketwatch.com is a great site, kind of lists everything out, and it has all the major headlines. I'll just scan headlines. Most news is garbage anyway. It doesn't really, it's just some guy wearing khakis in a cool office, has no idea what the world is really like, and he's writing some opinion on some office or on some article or whatever. So I don't really care what most people think. But I'm really just looking for, is there anything crazy happening? Did North Korea, Iran go to war? Did something crazy happen? Because those actually will, because remember, if we're doing something like gold, or even if you trade indexes, those are heavily going to be tied to serious events. So really we're just looking to see, like I said, is there any icebergs out there? Is there any crazy stuff? Right now the market looks pretty quiet. There's nothing ridiculous. It's summertime. Summer's usually a little bit quieter. Not as much crazy stuff goes on. People go on vacation. Life kind of eases out a little bit. So that's really fundamental. So you don't even really need to get too deep into it. The biggest thing, if you just want to take one thing from this whole thing, is to just keep an eye out for Fed times, right? And foreign payroll is also kind of important, and then unemployment it can be important, because for example, if let's say we're expecting 12.4% and we get 15% or something crazy, yeah, that could move the market. If it's very close to expectations, maybe not. But the market is it's ruled by big banks, and we don't really have a lot of say, and they have algorithms, very complex computers. I'm not going to get too deep into this. Let's get back to the actual technical stuff. So I hope this really explains what we're looking at. Just look for major stuff. Just major stuff. Don't get too wrapped into this. Reading too many articles really won't make you a lot of money. Fundamentals, and completely understand that there's a way to really see what major news events could move the market, and to, while understand them at least in a general sense, don't rely too heavily on them to make the decision. Really, this is where the most of everything comes down, and the biggest step I really think is checking the higher time frames to gain an analysis of the bigger picture. So the next thing that you want to do is you want to go into your MetaTrader, and you want to be able to get a good sense of where the market is headed. And I'm going to put on RSI on this, so you basically can go up here, go to Insert, Indicator, Custom, and then RSI. This is the only indicator we ever do, and I don't play around with it. It's very general, very basic. My charts are not pretty. MetaTrader looks like it's 100 years old, but it still works great. So let's look at, first of all, like I mentioned in the previous slide, is we look at the bigger picture first. So really we get an idea as to where everything is, and I personally always use just candlesticks. I don't use the bars, so I just use just like this, just how it comes, nothing fancy. It's very simple. So if we're looking at a monthly, which is the first chart we really look at, we can see that in general the market is in a very strong monthly trend, and the RSI, which I mentioned to look for, is 78, which is very high. Overall, I would say that, from this frame alone, I'd say that, yeah, the market looks pretty overbought. And then we can go to, for example, weekly, and we can see that the situation is also very bullish. It's gone up a lot. It's forming a divergence here as well. I'll explain what divergence is in a minute. And the RSI is still pretty much up there. It's 65, which is on the higher end. Anything 70 and above is considered overbought. 65 is getting there. So we're very overbought on the monthly. We're pretty overbought on the weekly, and we're going up. We're pretty strong. And then on the daily, we're at 66, and overall, yeah, we still are showing strengths. We rejected a move down and are keep going up. So really, I mean, to even really see the big picture, you'd have to zoom out very far. I mean, this is like a chart from 1998 to the present, so this is over 20 years. So, and you can really see that the market's all-time high was almost 2000. So really, I'd say that the bulls right now are trying to chase that. That's really the next level. And after that, it's all-time stuff. all-time prices. So really, we are chasing space right here. We're really rocketing. So that's really the perspective that you want to get. So we know that, okay, overall, I say just average all the time frames. So from monthly, okay, overbought, still going up, overbought, still, divergence. That's a divergence. And the divergence is when price, and this is very key, price makes a new high, but RSI does not follow it with it. So this means that price is not necessarily, in theory, matching up to it. So we see that price up here has gone, made a new high, but RSI down here, you can see, is getting weaker. So that's not a good sign on that time frame. And then I also look at the 4 hours, very reliable too. 4 hours, one of my favorite time frames because it's kind of no nonsense. So right now, really, we are chasing higher and higher. We had a very strong, we had like a triangle right here. You can kind of see it. And let me show this. So we basically had a triangle. We tried to reject it downward and broke out. And a short really was risky because this is an engulfing candle. This is a 4-hour engulfing candle. This is very strong. Very strong. The wick is longer and the body's bigger. That's a very strong move. You can make a lot of money just off of trading very solid engulfing. This is a solid engulfing candle as well. Notice that the body of the candlestick is significantly bigger. See this body? Significantly bigger. This body significantly bigger. These were reversals. So 4-hour can, for example, on this chart at least, show you some examples of reversals, right? If there's a solid engulfing candle, usually it will persist higher. So, for example, okay, here's another one right here. Right here. Very solid engulfing. Nice downside move came after that. So engulfing 4-hour candles are a high probability thing to look for. And then the only thing I wouldn't like about what we have right here is you see it has a long wick. It's a pretty big wick. So yes, we hit 86, but we have almost a 7-point wick. So maybe this will try to go higher, but maybe this won't. Could pull back. Right now, gold, from a sentimental point, is very solid. If you really look at, understand the Fed, but you don't need to really understand that. You could really see that. Yes, we made a strong move. We came up here. We got rejected on this wick a little bit. Overall, we're not totally bailed out, but we kind of losing steam. When you see long wicks, especially also on a 4-hour, then you also know that there's a strong possibility as well. Trying to find a wick example. Right, so like wicks here, wick, strong wick, strong wick. Wicks are really, really powerful. Oh, wick here. When the market starts to get weakened, it starts to wick. Right, if you see multiple wicks, right, and start to see some red, then it really showing it to you. See, look how many big long wicks over here. Market often does this. The more wicks, the more likely price is going to be rejected. So that's really it. So we get a baseline picture of where trend is from the monthly down to the weekly, and from lower time frame, we'll go from there. But you really just want to look at the big time frames, and this will start to give you an idea. Really, we're kind of creating a formula. Overall, if we want as many pieces to line up, for example, you want your high time frame and your lower time frames, if they're all kind of lining up for the kill, then your chances of winning are higher in that regard. But overall, and for example, in this example, we are nearing overbought, especially on a monthly. The higher the time frame, the more significant. The more significant, the more powerful it is. So then from after we look at the higher time frames, we go into the lower time frames. This includes all the way from hourly down to 30 minutes, 15, and then 1 and 5 is really just for really when you're ready to pull the trigger. So for example, in the 1 hour, we're really looking for high probability setups that have been historically pretty well. A lot of times, like I said, really isn't anything. You could just stick to one type of pattern, like extreme overbought, extreme oversold, or double bottoms. Those are really great types of things to look for, and divergence is another really good one to look for as well. So I'm really just trying to gain a perspective on first thing as well on the lower time frames of where RSI and price is. So for example, right here, RSI pretty low on the hourly chart, almost below 30, and then we had a long wick. So there's my confirmation. So really, this would have been a great trade, very great trade. A lot of nice things lined up. RSI was super low. We saw a nice rejection on this candlestick. We had a lot of room to go up. So this was a great area to get into. Another thing is you want to start being aware of where you could be wrong on every single trade. So, looking at different patterns is great, but you need to be aware, okay, where could I be wrong? This had a pretty nice risk to reward ratio. Being as it was right here, the lowest point it was at 47. So maybe I would risk 5 points. 5 points maybe around like 41ish area. Put my stop loss there as a buy, and I could ride, knowing how much of a steep drop this was. See, when you have a nice steep move, you do have the potential, if you can catch it, a nice risk to reward. So if you're right, you can make a lot. If you're wrong, you only lose a sizable, not that many points. So I could risk 5 points, and I could go back to 65, which is almost 15, maybe 20 points. So I had a nice risk to reward ratio with this. This is a perfect example of a great trade. The more you really think out your trades in terms of risk reward, the better you're going to do. You got to always be aware of, where am I wrong? So I'm wrong here, and where would I like it to go? I have a minimum take profit and a maximum take profit. I have a zone. Sometimes I just set, and I usually set the take profit kind of in the middle. So if I want to say, okay, I think that this fell down, and I want it to go back up to the support level, which was like 60. Okay, that's like my minimum. And I said, okay, maybe it could even go to challenge up here, right? So I would kind of want to be like 70. So 70 would have been reasonable. So I would have entered at 50 and try to make up to 25 points. Now, there's two ways to do it. You can just set your take profit, set your take loss, and get out and just sit on it. Or you can kind of just put your stop loss and see how high it goes. And then once it starts to lose momentum, then you get out. But another thing is really, when we trade, steep moves, or you got to be careful with, because they can mean certain things, especially for buying. So this is a very strong move, right? And it was on an hourly candle, right? On an hourly. This was a very steep move. Very steep. Very big move. Very strong. So I have to be careful. If I'm seeing these very strong, thick, long candlestick, the bigger the candlestick, the more significant the move. Although gold does like to revert. So I'm just saying, what I'm saying is, this is a very bullish candle. So regardless of what my lower time frames may tell me, I have to still kind of take into account that the higher judge is always the higher time frame. So if the higher time frame is really screaming something, I got to be careful. I don't want to get too caught up in trying to make another opinion on another lower time frame. So, right, so we saw that. That's extreme. That would be extreme oversold. There's going to be extreme overboughts. For example, right here would have been a good example to short. So, right, you saw the RSI right here was very at 77 on the hourly, right, and on the other time frames it was high as well. Okay, 4 hour, right, even on the daily it was kind of overbought. It was getting up there, right, but not the daily and the weekly and the monthly doesn't always have to be perfect, because those high time frames, they take a while. So if you're trading a few times a week, 4 hour and hourly are your best friends, because they're going to give you a pretty nice amount of signals. If you're trading super low time frames, then you're going to get way too many signals. So I like to average out the 4 hour and hourly for usually the majority of my analysis. So with that being said, for example, let's keep looking at the hourly, and let's see if we can identify some other patterns. So, right, that was the overbought. This was the extreme oversold, or overbought. This is extreme oversold. And then let me try to find another one. Another thing that I notice is very high probability is wicks, especially multiple wicks. So, for example, right here, this is a very strong wick area. Gold is very wicky. I like to buy wicks at tops and wicks at bottoms. So this is a wick at the bottom. See these wicks? These are pretty long wicks. And let's try to find an example of a high wick that was a really solid move. This was getting pretty wicky. It was going lower, and the wicks are staying pretty high. The taller the wick, the bigger the wick, the better. Here's a little move. Big long wick. Boom. If you're seeing if it's getting really wicky, like this is a very wicky area, then you got to be careful. Wicks really show rejection and show difficulty for either side to get by. So yes, we can look at hourly as well, but let's go to a little bit lower time frame, and we can uncover some other things. I think I have to go to the 15 minutes to show you this. So this would be the double bottom. But also notice double bottoms are great when the second attempt as a lower move is higher. So this is showing that the price came down, then it went up, then it came down, but not lower. It wasn't lower. It was a higher low, and then it just popped. So this would have been a good area to know that, especially right here. So a lot of times you're just being patient and waiting for something that you're pretty sure of. So double bottoms I've seen do very well. And it was also another fundamental reading the Fed today, basically saying that he doesn't want to keep rates up anytime soon. He wants to maintain low rates for some time, so that benefits gold, and the market interpreted that pretty well from today. So that's another big one. There's a few other different types of patterns. Really, I think double bottoms and looking for RSI divergence is also really key as well. You can find divergence. If you're looking for divergence, don't look anything lower than a 15-minute time frame. Usually, at least 30 and up. But the lower the time frame, the quicker the move. So really, how do you use the 1 and 5 minutes? 1 minute's really just kind of for just the last minute entry. For example, you can kind of also get trends out of it, right? So if I'm connecting the peak, so for example, if I was a guy right here and I was waiting for a buy, lower, okay, then I could buy it, right? Then I could get a little bit of a pump, a few points, right? Because then if you connect the troughs, it went up very temporary. This is just like a scattered example, but the 1 minute, don't get too caught up in it. it's really just for the only thing I really use the 1 minute for the most, or even the 5 minute for that, will, is to kind of just draw trend lines and kind of establish, is it within that time frame, just making a short term move up or down. And you're only going to get a short term knowledge of these. Like the lower the time frame, the more shorter the likelihood that you're going to get it. So yeah, that's really all 1 and 5 minute are for. So tying it all together, like I said, we're always looking for the relationship between RSI and price. Really, is RSI increasing? Is it decreasing? Is it and right now it's kind of making like a bowl or a cup, which is usually pretty bullish. This would probably yield higher highs, but I really wouldn't want to chase this because the RSI has gone up so high, and RSI is kind of like a less, filter to really say, okay, what is the overall, is the market cheap, is it expensive in this time frame, and really kind of filter you from chasing the wrong things. Really, you can avoid a lot of losses in trading, I think, if you're not. Don't buy when RSI is super high on like hourly, 4 hour types of time frames. If it's super high, don't buy, because that's dangerous. You kind of sometimes, I've made a lot just doing the opposite of what market has. And here's another one I just noticed. This is a double top. There's a 30-minute 1, 2. That's pretty reliable. I say medium reliability. Sometimes it's more reliable than others. And then like here's an area, like this is a very range area. This is why I don't really like to, like, this was not a great area because it's kind of tricky to, right, it was kind of in a range sort of. This one is kind of tricky. You don't have a ton of, it's not the best area to trade because you're not going to get a super great risk to reward. Like if I wanted to, like if I was right here, right, and I wanted to short, okay, I'd have to put like a few points, and I'm only going to make possibly a few points, right? How many points is like from the top? So from the top down, maybe like 6 points, right? You could maybe get like, okay, a 2-to-1 risk ratio. But the meat of the whole system is to attack these opportunities, like here, right, where it was extremely overbought or oversold. Oversold, and wait for this wick and attack it. Here's another one, right here. Boom. We saw that RSI was on the low side, and we saw a double bottom. Boom. Plenty of room to go up, right? Plenty of room. It just stuck at this level, consolidate. When the market consolidates too, that's another thing. So you got to put all this stuff together. These are technical fundamentals that you need to understand. When the market has held a level for a very long time, there's going to be a big move, usually either direction. So it held. It tried to go lower. It tried again. When it didn't even breach it even more, it failed even to go even lower, and went higher, and then it broke out. So this is a perfect trade. This is a pretty perfect trade. And then right here, really, there's not a ton of opportunity. I would say if the RSI was super low, this would be a pretty good buying opportunity, but the RSI is high, right? And the RSI is kind of actually almost sort of getting weaker, right? You can also tie this in and look for just divergence opportunities, right? So that's when the price fails to go higher with the actual RSI. So for example, this is sort of an RSI almost, right? Price went higher, but did RSI go up with it? No. Ideally, RSI, I want to go lower, but still, I mean, that arouses my curiosity. Like, for example, this would be a pretty good trade. And then it was very wicky, too. So you had a pretty good opportunity. I mean, you got to size up the opportunity, okay? So if, for example, let's just say this is the chart right now, This is all the world that you can see. And then, okay. Usually I only risk 5 or 7 points or something like that. So we take the top, right? And if it's at 29, I might say, okay, I'll enter in around here. Like, let's say if I just entered here. Actually, I wouldn't. Actually, I'll just do this. Okay, 29 is like, let's say I would say, okay, I can get in here, and this is why. If it goes past this high, if it makes a new high, I think it's going to go higher. Usually, when markets make new highs, in theory, yes, it's going to keep going higher. So I don't want to see it go higher. So I'll put my stop loss here. I want to short it because I see this RSI action, right? And what I want to do is I want to, I'll say, all right, I want to get at least down to here. And boom. That was pretty good. Because this was like the previous support. This is where the action happened. So yes, my take profit would have been hit. So this would have been a pretty good trade. You would have risked, you could have risked a few points to make, it would have been like at least 2 or 3 to 1 overall. Ideally, you want to be at least 2 to 1. Risk for every dollar. The ability to make, twice as much, or 3 times or 4 times. The best, the very highest, like I said, are going to be the opportunities where the RSI is very, very, very over extreme. Like here, I don't even really go anywhere. And here's the extreme, very overbought or oversold. And boom, look at the result. Yep, you had a good amount of room to go up. So these are some of the things that I look for. It's not a very complex strategy. It's really just looking at RSI and waiting. It's a lot of waiting. I noticed that if you really want to kind of cut out a lot of nonsense, if you really just wait, and you might have to wait for the very, very clear periods where the RSI is very clear. Like you don't have to trade a ton. You shouldn't have an entry every hour, right? It's very easy to overtrade. And if you have strict trade rules, it sucks because you can't place as many trades as you want, but at least you can cut out a lot of nonsense. And if you really just create a strict trading rule where I said, I only trade the extremes. Oh, like here, I'll trade this, I'll trade this, I'll trade this, right? And you kind of tie them all together, then you have a pretty good chance of winning. So, but there's also other times where RSI doesn't have to be super low, like we saw right here. Where is it? Right here. Like RSI, yeah, it was pretty low. It did technically. Actually, RSI got stronger. So RSI was kind of following it. So these are some great ways to really maximize your money. Really just making sure that you're falling in line with RSI. You are doing things like double bottoms, and avoiding the trades that are not as profitable for you or not as high probability. So I hope this really helps you. This is the general overview of the strategy that we use. It goes a little bit more in depth, but I think this will give you a solid foundation by understanding this.